Hello, this is your daily dose of financial market trends. Semiconductor stocks are getting hammered this morning as a brewing showdown between Washington and Beijing over Iran's sanctions threatens to disrupt the global chip supply chain. Let's break down what's happening. Heading into today's session, yesterday's close showed us a split market. The S&P finished at 7,653, down about 0.25%. Tech took it harder with the Nasdaq closing at 25,980, down 0.75%. The Dow bucked the trend, gaining 0.25% to close at 53,417. The VIX pulled back slightly to 15.75, while the 10-year Treasury yield dropped to 4.7% as some money rotated into bonds. Let's talk about what's driving attention today, starting with AMD. The chipmaker is catching serious interest after reports emerge that a major hedge fund dumped Nvidia shares in favor of AMD. The stock's getting hammered along with the broader semiconductor sector, but investors are debating whether AMD represents better value at these levels, given its competitive position in AI chips and data center processors. The social conversation has exploded as retail traders pile into the debate about which AI chipmaker offers the better risk-reward profile right now. Gold is having a moment. The GLD ETF is seeing unusual volume and spiking mentions as investors hunt for safety amid escalating trade tensions. When geopolitical uncertainty rises, gold tends to shine, and that pattern's playing out again today. With tariff threats multiplying and the US-China relationship deteriorating, the classic flight to safety trade is back in fashion. It's worth noting that gold often moves inversely to risk assets. So strength here tells us something about broader market anxiety levels. Nvidia is in focus for multiple reasons. The stock dropped nearly 3% yesterday as geopolitical headwinds hit chip stocks hard, but everyone's also positioning ahead of tomorrow's earnings report. Nvidia has become the barometer for AI spending and data center demand. So this quarter's results and guidance will set the tone for the entire semiconductor sector. The US-China friction adds another layer of complexity since any export restrictions or supply chain disruptions could directly impact Nvidia's business in meaningful ways. Broadcom rounds out the semiconductor story, down over 2.5% yesterday. Like Nvidia, Broadcom reports earnings next week, and traders are clearly nervous about what management might say regarding geopolitical risks and customer spending patterns. The company's diversified chip portfolio means it touches everything from smartphones to data centers, making it a useful proxy for broader tech hardware demand. Right now, uncertainty is the dominant emotion across the entire chip complex. Three major geopolitical scenarios are shaping market thinking right now. First, US-China tensions over Iran sanctions are escalating. China's warning of potential retaliation after the Treasury threatened secondary sanctions on anyone doing business with Iran. The bull case, given about 30% odds, is that both sides find a compromise with carve-outs, allowing limited Chinese commercial engagement while preserving the sanctions framework. That would unwind defensive positioning and lift multinational tech and financial stocks with Chinese exposure. The bear case, at 45% probability, involves Chinese retaliation through export controls on critical minerals or reduced purchases of US agricultural products and treasuries. That would disrupt semiconductor supply chains and send more capital into gold and safe haven bonds. Second, the Trump administration just announced plans to jack Canadian auto tariffs up to 50%, threatening a full-blown North American trade war. The bull scenario, at 25%, sees Canada offering concessions on dairy, lumber, or energy that lead to tariff rollbacks, which would rally automotive and industrial stocks dependent on integrated supply chains. The bear case, 55% likely, has Canada retaliating with its own tariffs on US agriculture and industrial products, compressing margins across the automotive sector and dragging down broader indices on growth concerns. Third, Iran's economic blockade is creating oil market uncertainty. US sanctions have citizens queuing for fuel, and China's response will determine whether oil markets stay calm or spike. The bull path, 35% likely, has China buying oil from alternative sources or strategic reserves being released, which would ease inflation fears and support rate cut expectations. The bear scenario, at 40%, involves threats to shipping lanes or Chinese retaliation that reduces oil purchases, potentially pushing crude above $100 and reigniting inflation concerns that keep central banks restrictive longer. The housing market remains stuck in neutral. 30-year mortgage rates sit at 6.65%, while housing starts have plunged over 13% year over year, even as building permits rose slightly. Inventories climbed to 9 months of supply, but prices are only up about 1% annually. Builders are permitted but hesitant to break ground, waiting to see if rates drop or buyer demand strengthens enough to justify new construction. NVIDIA reports tomorrow, which is the week's marquee event. Broadcom follows next week. Both earnings calls will be critical for understanding AI spending trends and how companies are navigating the current geopolitical mess. 5 things worth watching from here. 1. Semiconductor stocks are caught between strong AI demand fundamentals and genuine geopolitical supply chain risks that could materialize quickly. 2. Gold's strength isn't just noise. It's telling us institutional money is hedging against further trade deterioration and policy uncertainty. 3. Tomorrow's NVIDIA earnings will either calm nerves or accelerate the rotation out of high multiple tech, depending on what guidance looks like. 4. The housing market's freeze between elevated rates and sticky prices is creating a coiled spring that eventually has to release one direction or the other. And 5. Multiple tariff fronts opening simultaneously. Canada and China raises the odds of policy mistakes that could tip the economy into genuine slowdown territory. None of this is financial advice, just context to help you think through what's actually moving markets right now. That's your Market Digest for Tuesday, August 25th. Remember, this is education, not advice. Do your own research, and I'll see you back here tomorrow morning.